Hello, ladies and gentlemen. Welcome back to the X-Force Global channel. Thank you very much for joining me today. Hope you all had a fantastic weekend. Today, we're going to be talking about Bitcoin's price action and continue talking about the narrative we have been talking about on X or Twitter and also from our previous video. As I must cater to both the bulls and bears, I hope my analysis does show a neutral approach to help build your own thesis on the bearish or bullish outcome. Nevertheless, I do share my probabilities and personal sentiment that is deemed not financial advice. So without any further ado, this is our first scenario of high probability, and it's the continued idea of our internal X-wave continuation of a larger corrective combo pattern. We are not entirely out of the woods just yet, as we still have some clear obstacles to get over, but this idea has been discussed for a few weeks now and is still my primary scenario at the time of recording. Now, we seem to have gotten a pretty clean ABC move to the downside. I believe many were seeing this as a possible WXY move, which is now still possible, but I did share this in my members only group where I did discuss the possibility of an ABC being possibly complete here and looking for a possible continuation with an impulse to the upside. Now, if we're going to go over the shorter time frames in just a moment, but if we look at this, we're still looking for this possible 1-2 being complete or still being in the making, but that's going to be possibly a part of a different continuation pattern. But for now, what we're looking for is this ABC and looking for this expanded flat for wave X to complete around the 0.7 or the 0.886 region, possibly up into the 90% region for this X wave to complete, and then having this Y wave of this combo to complete this overall equilibrium zone for this wave 4 possibility before we move out into all-time highs. But for the time being, for this current time of recording, we do have a possible ABC complete here for this wave 2, an expanded diagonal going into wave 1, 2, and now working for the internal degree structure of this extended possible wave 3, 4, 5, and then we're going to be completing this X wave. Again, for this impulsive move, we're looking for this C wave to complete of this expanded flat, ladies and gentlemen. Again, we had this wave A, we had a three-way move into wave A, a three-way move into wave B, very clean A to C ratio, almost hit the 1.618. The B pocket zone hit right on target around the 1382. Our initial targets for expanded flats, like I have mentioned, is based on the guidelines of the 1236 and the 1382 zone. We hit that zone very nicely. And obviously, this looked like a clear impulse move to the upside. And we're utilizing this as an impulse, not a three-wave move. But again, there are ways we can count this as a forced three-way move up. But again, you don't want to be forcing those. Right now, we want to be utilizing how this can either lead us into a wave 1 or a wave A. Again, I'll discuss that in a moment, but for now, we're seeing this as a wave 1, 2, and now looking for a wave 3, 4, 5 to complete this overall pattern. Remember, we're utilizing this whole structure as this internal wave X as a transitional wave of a flat move. Our first move of the wave W was a flat in itself. B wave hit that 90%, so this is deemed as a possible flat being completed for wave W. And then we're looking for a possible zigzag triangle of some sort. We don't know yet. We'll have to see and how this will play out. But first, we need to really clear some obstacles, most notably clearing this top here and then clearing this top here for the immediate term. Now, this idea is still my primary scenario. I do believe that this is going to be the continuation of the bull market once we do get out of here after finishing this wave Y, but we do have some alternatives on how we can continue higher or down. But for now, I do like the idea of being neutral and being in some kind of range for the time being before we continue up to new all-time highs. Now, the pros and cons to this, again, the pro to this is that we did have a very strong impulse move out of here. We want to utilize this as an impulse, right? 5-wave move up, very clean. We had a 16% move off of these regional lows, and that gives us a kind of a confident idea that this is going to be either a wave 1 or a wave A of some sort. But for now, since we're in the idea of being in an impulse, we're going to utilize that idea as being a wave 1. So this actionary wave is now complete. And then after that, when you're looking for a wave 2, you're looking for an ABC kind of idea. Again, this was discussed in my more detailed analysis in my members only group, where we had that possible ABC coming into this move. But remember, a lot of people were seeing this as the possible A and then B and then C, or you can have this as an ABC going into a wave W, X, and then we were looking for a wave Y. And this is also the shared analysis that I had as a possible alternative. This was also shared on my social media. But for the time being, again, we're looking for the idea of continuation, just because we had this possible breakout and this current time of recording, this personal breakout right here is very confident as well. We've pretty much retraced almost 80% of the whole move to the upside since this drop we had over here. Again, that kind of Bart Simpson pattern that we're looking for, kind of a extreme reversal. It was a little orthodox of a move to happen like this, but it still fits in the idea because we do have a possible expanding diagonal of some sort, which I'll go over in just a moment. So this is the first idea that I do believe that this is going to be a continuation as an X wave. We're going to be working for the main Fibonacci levels of that 70% or that 80% level to the 90% level for that X wave completion. So if we got that first scenario out of the way, now we do have a possible idea of that double zigzag scenario idea. Again, we do have that possible completion of that WXY. Again, we ideally didn't see this as a possible ABC zigzag since X wave was hitting that 90%, and that made it unlikely for this to be a completed zigzag. So managed expectations here, ladies and gentlemen. The biggest test of strength for this idea is that we're going to be breaking this level with a strong impulse. If this turns into a strong wave 3 and wave 2 has completed, there's a lot of obstacles to clear here. So stay clear for this scenario for the time being. We don't need to rush into things. Again, we're still expecting upside, but again, we want to be, more lenient on ourselves, risk reward management. All those sorts of things in terms of risk management is very important. So we need to be neutral as possible and kind of be a contrarian in terms of the price action as well. So if this idea continues as a third, then it's perfect. It goes up, continues up. But in the idea that we do complete a possible WXY, this idea can even come more into fruition if we do have a possible WXY. But again, this idea is also starting to lose its validity due to the strong move up, and this XY is starting to look unlikely in itself. But again, the idea is still there. We're going to look for a possible continuation of that hybrid scenario of the X wave transition, because again, we're utilizing this idea as the wave 1, 2, same idea of this region here. So that overlaps with that scenario, and that's the kind of hard thing for organizational structure when you're becoming an Elliott wave analyst. As an Elliottian, you really need to learn how to manage these expectations and how to learn how to overlap these scenarios and make it become a more narrowed down scenario. So that's one idea of the double zigzag scenario that could be complete. Still monitoring. We are not there yet. We need to break that biggest test of strength level once again. Now, the second idea is the possibility of a continuation of an idea of an ABC going down. Now, this idea is possibly not in play anymore. I think there was a few people who mentioned it to me where we could have a running flat idea here. Again, having a running flat idea is perfect because we did meet the clear expectations of this, where we did hit a possible X wave being complete. So all we had to do is say that instead of X wave moving here, we're moving here and saying this is the possible double zigzag scenario, or we're working for another ABC move down. But remember, you only can have ABCs or simple zigzags within waves W and Y. You cannot have another WXY within wave Y. So if that is the case, and we only are utilizing the ABC, we need some kind of motive wave actionary wave down into a wave A, but we're not finding that right now. And the only way I can complete it is possibly having this as an A wave. This could be the ABC of some sort, and then we're moving down. But this idea is still too far-fetched. Since we can't utilize any WXYs within this wave Y, I think this idea is out of the picture for the time being. So that moves me on into a possible other way on how we can utilize the possibility of having another X wave continuation to the downside, which is a possible triangle idea. Now, this idea is a little bit far-fetched in itself as well, because the idea of the apex being quite extended in time and also nearing the end of the apex if we do complete this. Now, usually when apexes are highly extended, that makes this triangle unlikely for it to happen, but it does give its peak validation in terms of whether you're in a B or an X wave. Again, the reasons I've stated here, the WXY complex in a triangle is also now being utilized. So instead of having an actionary wave for that final ABC move to the downside for wave Y, we can alternatively utilize this ABC that we had for that wave 2 and use this as a new complex corrective structure for this wave X, and then we're looking for an ABC down for this subwave D, and then we'll still likely see some kind of bounce for this E wave, whether it does truncate and doesn't hit the trend line expectation. We can still see some kind of triangle being built, but again, the main problem is this move here where we moved up quite significantly against this bottom out move here. That's giving us this X wave a little less unlikely move because we've hit most of the major Fibonacci extensions of the 618, 786, and now we're even retesting the 886 Fibonacci level, which makes it unlikely that this retracement is now looking a little more impulsive in terms of how we're going to be continuing the move down. Doesn't seem likely at this point again, but this idea does exist since we can utilize this ABC as a wave WXY. Again, the main problem with this is the apex extension and also having a WXY complex within a triangle. You only can utilize one complex correction within a triangle, and you can't have a second complex triangle. So this has to be a simple zigzag. But nevertheless, we do have the 3 subwaves made in. Usually what I like to do for trading triangles for a higher probability is to at least have the subwave D or the 4th subwave within a triangle corrective pattern, or even a diagonal for it to be more valid. And even then, it's still very difficult to trade. And as you guys all know, we've tried to trade triangles within this region, and that failed miserably for a lot of people, for bears and bulls. So now the next idea is in the term of a larger diagonal, which is going to be based on the bearish or bullish idea continuation. Now, this idea is based on the flat idea. So if we look at the flat idea, we're still looking for some kind of expectation of a larger flat, right? Now, in terms of the flat, how we can play this out is a few ways, ladies and gentlemen, which is either we have a completed diagonal, or we're still working for some kind of diagonal for this bearish scenario. Now, we do have all the requirements in terms of having these overlaps. We're possibly completing with this wave 4. I don't like this idea of the subwave 4 being complete here again, because we have to complete some kind of ABC to the upside. Now, this idea is very, very, very far-fetched. So what I like to do is move on to the alternative scenario and say that the diagonal number 2 has completed already. Now, we already have that B wave now complete. So in that case, what we would have to do is say that the diagonal has completed. And I don't like this idea in terms of it already being complete as well, because of this overshoot being so overshoot, in my opinion, making it unlikely. Now, it can be. So we talked about this move up being a possible wave A or 1, but here, since the wave of this diagonal is completed, we're utilizing this 5-wave move up as a wave B. So what we can ideally say is that since we do have a possible 5-wave subwave completion of this diagonal, the move should be here. And then this being the utilization of that impulsive 5-wave move up for a wave A, this ABC into wave B, and now we're looking for a C wave, and that gives us a lot more room for this idea to play out. But you see the problem here, ladies and gentlemen. This looks a little odd, doesn't it? You don't want to have an odd looking structure overall for having a good look of a structure. The idea exists, but something that you don't want to be utilizing, because this overextension shooting gives us possibly a different, better alternative in terms of what these scenarios could be. So that brings me on to the third idea of a diagonal, which is a little bit more higher in probability, which is we're still working on a larger diagonal. Now, this is now the hybrid idea of a bullish and bearish scenario, meaning that this could be the end of something or the beginning of something. Meaning, if this is the end of something as a wave 5 of that larger diagonal, or flat rather, that flat idea I talked about bringing us all the way down to $10,000 levels, we can utilize this as the beginning of a possible 4th wave still being complete in progress. Meaning that if we're still utilizing this as some kind of impulse and some kind of corrective move, we're looking for another 5-wave move up into wave C, to help still give that contracting look. We don't want it to move up too far, and then we come down for one more move of a possible 5th subwave, okay? So if this is going to still give us that contracting look, meaning that we don't want to be going up further, because that's going to start giving us into expanded expanded diagonal territory, and those are even more or less uncommon. we want to still keep this idea of a contracting good look of a diagonal. So this idea is already still far-fetched, but its idea is being put there. This is the best way I would personally put it, by utilizing this impulsive move here. So we're looking for another 3-wave move down after this impulse completes. But again, this C wave would be awfully short against this wave A. So already there, the probabilities have shifted into something else. It's not impossible, but it's still there. Now, if that wave 5 is the end, this has to lead us into a wave 1 of a larger corrective move that we're looking for, a wave 2. So that wave 2 is still going to be bringing us into that higher territory, possibly into the 50% or 618 zone. Even the 382 is possible. We definitely want to break this trend line. And then if we do that, we're looking for that wave 3 to the downside. Now, if this is a wave 3 and wave 4, same thing. Now it's putting us into a possible diagonal as well that completes as an ending diagonal of some sort. That's going to bring us into a possible wave 3 rather. So this diagonal idea is going to be overlapping in terms of how we're going to see it as a possible ABC or a 1, 2, 3 continuation. So that idea is still far-fetched, and you see why the bear scenario is now starting to lose its strength. For a lot of the bears, they're losing a lot of probabilities in terms of scenario outcomes. So this is the idea of how the bear scenario I would have it. We did have the idea of possible 1, 2, 1, 2s being created, but right now those ideas are now starting to become a little less likely. So those are ideas that I do not want to even share or even entertain due to the idea of the second wave 1, 2 being as a running flat. This idea is already losing its validity for 1, 2. I don't like the idea. So for now, we're looking at this diagonal idea either as the hybrid of a bearish or bullish scenario. So the only bearish way I can currently see with the current data is that we're looking for, again, the end of something here as a fifth. This leads us into a leading diagonal of a wave 1. Remember, it cannot truncate. Leading diagonals cannot truncate, meaning that it has to go beyond the sub wave 3. And then we're looking for a move to the upside for a 3-wave move for a wave 2. And then 3, 4, 5 to the downside. Okay, so 2, 3, 4, 5. That'll lead us pretty destructively, violently to the downside after this rejection has happened. And that's possible because we did have a lot of buyer's exhaustion here. Maybe we'll have another buyer's exhaustion here. Just not enough strength to continue the market. We've already had such a high bull market, right? So this idea can still continue as a bear market idea. But if that doesn't happen, again, this idea of a 3-4 is also possible where we continue up and this wave 3 also continues. So you see how there's a lot of bullish scenarios in terms of managed expectations. And again, this goes out back to my idea of having the expectation kind of scenario ideas. How can you, with the current data, manage your expectations? Are we in the end of something, the middle of something, or the beginning of something? Again, I have mentioned that we're in the possible of a middle of something, which means the transitional X wave, right? And then we're looking for that wave Y. And that gives us the most neutral and rational approach. So this is my highest probability, meaning that it's very, very possible that we're in the middle of something first. And if that's not the case, are we in the end of something? That double zigzag scenario. That double zigzag scenario is my next scenario where we talk about this was the end of something, this wave 4. And now we're in the beginning of something of a larger move. That might be the end of something. Now, the beginning of something could be that diagonal idea where we talked about just now. This idea of possibly being a 1, 2, 3, 4, 5 being that continuation for a diagonal of the bearish idea. So if this idea works out, I think this idea is going to be possible if we do get another move to the downside, breaking these lows, and then we continue up for A, B, C for a wave 2, and then we continue down. So hopefully that was helpful, ladies and gentlemen. I kind of wanted to go over all of the expectations and what I still see that possible X wave, transitional wave being played out. I think the next few days, or at least within this week, we're going to get some more information. But for now, this move up is significant enough for me on the shorter time frames that we're going to be continuing to the upside. Now, let's talk about the shorter time frames. The shorter time frames is based on the idea that we have completed the ABC. Now, the ABC being completed here, this move here was possibly the transitional X wave or ABC move to the downside. But again, I have made it clear that this ABC was the move down. And we're looking at some kind of expanded diagonal into a leading diagonal of a wave 1, clear ABC into wave 2. And now this is the impulse of a 3, 4, 5 being made, 1, 2. And then that's going to bring us into the X wave of that wave 3, 4, 5. And that's how I currently see the current scenario. So hopefully that was helpful, ladies and gentlemen. Thank you very much for joining me in today's video. I'll see you guys in the next video with more analysis as more data is being printed. For the time being, hopefully everyone's trading safe. Have a fantastic week. Thank you very much. Bye-bye.